Looking at your market news now, global stocks are poised to end the first half on a strong note, with investors looking to key U.S. inflation data for clues on the timing of Federal Reserve interest rate cuts. Most emerging market stocks and currencies rose ahead of key U.S. inflation data, with the rand gaining as South Africans wait for cabinet announcements. When it comes to the rand, we saw the currency rebound 1.5% to around 18.20 to the dollar after hitting a two-week low in the previous session. While the yield on the benchmark bond dropped over 22 basis points, investors are on tenterhooks ahead of executive announcements in the country's first coalition government, as disagreements remained between parties more than a week after President Cyril Ramaphosa was sworn in. In terms of market performance, the all-share index up 1.4%, financials up 3.4%, industrials up 0.7%, and then the resources in negative territory, down about 0.2%. To give us perspective and help us wrap the week, we are joined by Thato Mashego, who's a portfolio manager at Sanlam Private Wealth. Thato, thank you so much for your time. I mean, to talk about volatility when it comes to the rand would be an understatement, but it's been a pretty busy week market-wise in terms of us waiting to see when these GNU cabinet appointments are actually going to be announced. Take me through what you're seeing on your screen and how you're, basically understanding the market picture right now.
Good afternoon, Anastasia. I think you're 100% correct in one cannot understate the volatility that we've seen in the rand. And of course, market participants are waiting for a bit more clarity around the GNU. So of course, I think last week, Friday, we saw quite a lot of strengthening in the rand, and especially on Monday and Tuesday, perhaps people positioning for what they considered a stable and perhaps a government that would institute some market reforms. But of course, there was some reversal in the last few days as tensions between the two main parties in the GNU seem to have spilled out into the public. So at this stage, it really is a wait-and-see game, and it's a binary outcome in terms of short-term reaction to whatever news does transpire. So very difficult to call right now.
All right, so let's talk companies for a moment and look at Nampak, because they released their earnings this morning. That share price at some point was up 6%. What's the earnings story or takeaway when you look at Nampak's results?
Well, I think Nampak's results were quite positively received. If we look at the performance over the past few weeks, and I think since the trading update, the share price has risen quite considerably, around 50% or so. So the market cap back to about 2 billion, from the lows of below 1 billion. But a lot has happened in the past period for Nampak. They finally got their rights issue off the ground, so to speak, raising around 960 million. And a lot of those proceeds were used to pay down debt. The net debt to EBITDA now sits around 3 times, so well below the covenant levels of 6.5 times. And seems like some of the underlying divisions are performing reasonably well. So paper and plastics, from continuing sales, grew the top line around 10%. Bevcan, or the metals division, still quite a lot of problems being reported there, or seems like there's still some issues in Bevcan Angola, as well as in South Africa. I think, they mentioned, load shedding having reduced, plant efficiencies. But going forward for Nampak, I think getting rid of those discontinued operations, which they've, placed as non-core, such as the Nigerian business, the Zambian and Malawi businesses, could really improve the story. So they still lost around 500 million off of those assets, and they made around close to 1 billion on the continuing books. So it's still a drag, but not as bad as before. So things are getting better, and there seems to be a light at the end of the tunnel for Nampak.
We had First Rand releasing their trading update, and some may say maybe it was not as detailed in terms of what we've seen from the other banks. What was the overall theme out of that trading update?
I think perhaps the key theme being a bit of colour with regards to the FCA provision. So the UK regulator obviously had opened a case against FirstRand with regards to motor commissions. So FirstRand believing that the fine will not be as perhaps severe as the market had expected, and they've reduced their provision, or they've released some cash from there, which does benefit the expense line. I think also them just commenting on some trading performance in the UK, which is perhaps going to be better than what people are expecting. So overall, if we consider group credit loss ratios, they may come in closer to FirstRand's or the bottom of their through the cycle range. And this is a lot better, I think, than some of the other banks that have reported. For instance, ABSA, which did disappoint with their trading update, and credit loss ratios there perhaps reaching close around 125 basis points. So quite a wide dispersion between the two. So I think some of the banks with a lot more Africa exposure, especially Naira currency devaluations, has had quite an impact recently.
Is there a stock or a sector that has been able to master a sustainable rally when you look at perhaps even the first half of the year?
Well, sustainable is, I think, one question, but to the question of a rally, one obviously has to start with global semiconductors, and we all know the story there, some of the underlying drivers with AI data centers being built out, as well as in the legacy chip segment of the market. So a lot more chips being used in applications from cars to home appliances and so on. Even despite slowdown in global consumption, there's a long-term structural driver there. Other more, I guess, tactical sectors, one can look at gold, which is one I still continue to have a bit of a partisan perspective on, just given the outlook for inflation and some of the stickiness that we do see there. Yeah. And if we do start to see the rate cuts that we've seen from some central banks, that is also positive from gold perspective.
That's very interesting. The one thing I also find interesting is that your weekly stock pick is TFG. Now, while you talk about why that is your weekly stock pick, we're going to put a 10-day chart and a 5-year chart just so that the viewers can get an overall sense of the performance. But talk to me about why TFG is your stock of the week.
Well, not so much of the week, but performance has been quite strong in the past week for TFG, along with a lot of, all the credit retailers and the SA Inc. play, especially as we alluded to earlier around potential GNU talks. However, with TFG, I think what's interesting is the bulk of their manufacturing does take place in South Africa. So you don't have you're not importing inflation by a weaker currency. 70% of the revenue does come from South Africa across various LSM groups in clothing and home. So if one considers that we may start seeing a reduction in interest rates locally, as well as if one considers the potential changes to the two-pot system and some additional cash in consumers' wallets, then TFG is one of the companies that one could consider. They have significantly underperformed Truwords over the past 3 or 5 years. I think Truwords has doubled in value. TFG has remained relatively flat, although they are priced quite similarly in terms of 11 times forward multiple. So it's perhaps a play, but one, of course, has to have a positive outlook on the local economy going forward.
On that note, then, before I let you go, just quickly, your conviction on the clothing retailers, then, are you more optimistic towards them as we get to the latter part of the year?
I would say from the position where they are valued, and if one considers an increase in potential spend, so an improvement in consumer balance sheets from lower interest rates, as well as potential, once-off flows if people start withdrawing on, a third of their pensions, then yes, I would say that the credit retail segment will do well. So that includes Fashini as well. And I think the fact that they're spread across LSM groups, they've got a very wide reach. I think 1 in 2 South Africans use their rewards card. Mm-hmm. So I think they are particularly well positioned in that sense.
All right, Tato, thank you so much for your time. That is Tato Mashego, who is a portfolio manager at Sanlam Private Wealth, helping us wrap up the week. We're going to take a quick break. When we come back, we'll have SME on point with Diabo Sito, so stay tuned.